Hey, what's up, everyone? Welcome back to my world of stocks. I got a special episode for you today in our Stocks My Viewers Want Me to Review series, where I take a comment from viewers asking me to share my thoughts on a particular stock, and then I make a review video for it, sharing my thoughts and opinion on that stock. Now, for today's episode, I've actually been getting lots of comments asking about cybersecurity specialist CrowdStrike, ticker symbol CRWD. So I just picked a quick comment here from one of you guys. This one from IJman35, who asked, "Would love your thoughts on CRWD. Do you think they will come back from the recent blunder, or will they keep falling? I'm trying to decide if I should get out while I'm still up and buy back cheaper. Thanks." Okay, so thank you for the comments. Now, as you guys know, though, I am, of course, much more of a long-term minded investor, so I generally stay away from these type of short-term predictions because it's really impossible to time the market or know how a stock will perform within a short window, unless of course you get very lucky or have some kind of insider information, of which I have neither. So instead, I'm just going to do some analysis here for you guys and share my overall thoughts on the stock from a long-term perspective, whether I think it's a good buying opportunity for a recovery or not. And I'll let you know what I plan to do myself too, as someone who does not currently own the stock. So we'll just start with a quick recap on why it crashed by so much. It lost about a quarter of its value just in the past week alone. And then I'll give a couple of bullish arguments, some bearish arguments, and I'll finish up with my overall conclusion and what I'm doing myself. Sound good? All right, then let's go ahead and dive into it. Okay, so just looking at the past week here, we can see almost a 25% crash in the stock price and more than a 30% crash over the past month alone. So why did this happen? Well, the first thing to know about CrowdStrike is, of course, that they are one of the biggest cybersecurity specialists in the world, with their cloud and AI-powered Falcon platform being one of the most popular options for businesses thanks to how convenient yet powerful and robust the all-in-one singular platform is to really set up for your organization, and then you can add upgrades and special modules to fit your specific needs as time goes on, all of which CrowdStrike advertises as improving your security performance and efficiency while also saving on costs, which is a great proposition these days given how weak the economy is and how businesses are trying to digitalize more. They're turning to things like big data, AI, and cloud technologies to fuel new growth, all of which CrowdStrike can help keep safe, which is of course very important. Data is like the new, I would say, like gold. It's like the oil, whatever analogy you want to use. But it's very, very important for these businesses to keep all of that data safe. And so that's why cybersecurity is so important. And because of this, well, CrowdStrike has now been able to attract about 29,000 different companies around the world to use their services, including even some very well-known giants like Google, Amazon, Intel, Target, and even the US government, all of which has helped CrowdStrike become the fourth largest global market share leader in cybersecurity in the world, at least according to Canalys Research, which is the most recent data we have on it. But while it may seem a little small at just around 4% market share, well, the really important number that you got to pay attention to here is the 34% growth rate, because it's completely unmatched by really any of the competition, other than maybe Microsoft. They're just in that segment. Now, CrowdStrike has easily been putting up the highest growth numbers in recent years. And again, it's because of that robust yet simplified Falcon platform that businesses love to use, and that's really kept them growing red hot. That is up until, of course, recently, where about a week ago, well, the world experienced what is being referred to as probably the biggest IT outage in history. Now, this was caused by a faulty software update from CrowdStrike that they released for Microsoft Windows systems. Of course, most computers run on Windows, so if you're a CrowdStrike customer, which many businesses are, and you also use Windows, which most people do, then you likely encountered this bug that caused widespread disruptions impacting everything from hospitals to airlines to banks and countless other businesses. Now, CrowdStrike did quickly issue a patch to address the core issue, but many systems remained problematic, with most affected computers requiring manual reboots. That's a process that can take considerable time and even manpower to resolve those lingering issues. As a result of all this, because so many business operations were disrupted, well, the fear is that CrowdStrike might be facing settlements, fees, and perhaps even lawsuits for months, if not years to come. Now, much of that right there, of course, though, we have to clarify that it is mostly speculation, because we really won't know the real impact of all of this until probably years from now, where we can look back and see just how many companies actually fined CrowdStrike or won any litigation against them. Which, by the way, I believe that in their terms and conditions, they state that it limits their liability to just fees paid by the customer. So the most likely scenario I think we'd see is really just a lot of refunds taking place for services that CrowdStrike has provided these other companies. But even that, of course, could still be pretty substantial if you're having to refund, a big chunk of your revenues. Plus, we don't even know if any of their customers had custom contracts that might actually raise their liability from there. So again, all we can really do is kind of speculate at this point. But what's probably a lot less speculative is in just kind of assuming that their brand and reputation has at least taken, probably a pretty big hit from this, which could slow down some of that explosive growth that we talked about earlier. That is, really so important for differentiating CrowdStrike from much of the competition. That's a big advantage that they've always had, was that explosive growth. Well, if now you're seeing that less companies want to sign up with them, if less companies want to renew with them or upgrade with them, that growth is going to come to a maybe not a screeching halt, but it's going to probably take a big hit. So anyway, because of that, investors sold out of the stock in droves, causing it to crash heavily over the past week, as we looked at earlier. So where does all of this really leave us now? Is this a massive buying opportunity to get in while we still can? Or is the risk and uncertainty of their future following this giant blunder just too big to ignore? Well, let's start with a couple bullish viewpoints on this. Now, first of all, cybersecurity is, we all know, it's one of the absolute hottest high growth tech markets that you could possibly invest in right now. In fact, according to Gartner research, the area of technology with the largest amount of increased investment among companies recently was actually cybersecurity. Guys, that's even ahead of cloud, AI, and more. That's pretty freaking crazy. And in total, most analysts agree that this is a market that will be worth, many trillions of dollars long term. I mean, Forbes even thinks that by next year, there will be $10 trillion worth of cybersecurity damage. So there's a giant need here for added protection. And the good thing about CrowdStrike is that even as bad as this recent issue was, it didn't really have anything to do with their abilities in cybersecurity. Instead, it was really just a faulty software update, which, by the way, many companies tend to have those kind of mistakes. They tend to make those mistakes pretty often. Now, granted, it's probably nowhere near the scale of this size and damage, but I just think that this is a much more kind of understandable mistake, as opposed to allowing some kind of massive data breach or cyber attack that would make customers think that the Falcon platform isn't as good as they once thought. But that's not the case here. It had nothing to really do with that. And yet it was still a big enough mistake to crash the stock price by a very large amount, which leads me to the second bullish argument. And that's that this really looks like here another classic case of you probably weren't going to get a deal like this for a red hot growth tech stock if it weren't for some type of big mistake that at least temporarily drags it down just long enough to present us with a buying opportunity for the long term. And ultimately, that's what I mostly feel this is, because cybersecurity will only get larger over time. In fact, most years we see a record number of data breaches because of how digital the world is becoming. So demand will only grow larger over time. And CrowdStrike was growing faster than all the competition before this mistake happened, which again, I think is a much more fixable mistake that we can eventually move past of, rather than it being about their actual product not working or not being effective. So just from that standpoint alone, I actually do think that the stock is mostly a buy here, which, by the way, most analysts agree with me, as the current price is right near even the most negative lowest price targets out there. In fact, there's been a ton of talk lately about analyst downgrades, which, by the way, also helped push down the stock further. But the funny thing is that even with those downgrades and zero upgrades, like there's been no upgrades, but it's mostly just been maintains or downgrades, Well, all the new price targets are still much higher than where the stock trades today. Like, look at some of these figures here. So, since the event took place, here's some ratings. Maintain 56% gains on the price target. Downgrade 2% gains. Maintain 30% gains. A couple downgrades with no price target, but then you have another maintain 50% gains. Maintain 15% gains. Maintain 30% gains. Maintain 41% gains. A downgrade, but still 11% gains. Maintain 47% gains. Downgrade 12% gains. Maintain 24% gains. Maintain 20% gains. And then a total of 42 analysts with an average buy rating that has over 35% upside. So that is still very bullish sentiment overall on the stock. However, there are still some bearish arguments to keep in mind here for why the stock may actually not be a buy right now, why it may not be as great of a deal as you might initially think at first glance. And look, I know for me, there's really a couple reasons why I might feel that way in particular. The most obvious, of course, being just that sheer amount of uncertainty that is surrounding CrowdStrike right now in terms of not really knowing just how big of a hit their brand and their financials will take going forward, especially considering how saturated and highly competitive the cybersecurity market, is becoming these days, and how much that might hurt CrowdStrike and give an advantage, give an opportunity for some of their competitors to steal some market share or steal a little bit of the thunder right now. And that's especially the case considering that CrowdStrike just started becoming profitable last year. So if we see them now get pushed back further from that profitability in the coming quarters or even years because of fines, refunds, or even lawsuits, well, that could definitely still sink the stock even lower from where it is today, which actually leads me to reason number 2. This is probably the biggest kind of bearish argument that I could make on the stock here. And that's that it's not even as cheap as you might expect it to be. Even with the giant crash, you're still talking about a very rich, well, let's put it this way. You're talking about a stock that was already very rich to begin with. And now after the crash, it's just gotten more reasonable, but not necessarily cheap. Because we go back to the stock here for just a second. We look at this chart. So we can see that even after losing more than 30% from the top, it's really only lost the gains from the past year or so where the stock had absolutely skyrocketed. In fact, even today, it's still trading at one of the highest prices that we've ever seen. And if you think that's crazy, well, even with the recent crash, CrowdStrike is still positive this year. So how much of a deep crash or discount are we even talking about here? Well, you look at the valuation and it's a bit of a mixed bag. Now, yes, it is around 70% lower than their 5-year average on an adjusted PE basis. And the PEG is also about 16% lower than the sector, which I would normally say is extremely good for what is, the highest growth cybersecurity stock in the market. But that's assuming that their profits continue to grow in the coming years, which again is not guaranteed coming off the fallout of these recent issues that they just had. And if we look at the valuation from just where it sits today, adjusted forward PE is still about 200% higher than the sector. So that's pretty darn expensive. So it's really the future that we'd have to look forward to for that valuation to come down. And we would need a lot of earnings growth for that to happen too. And so right now, the forward PE is around 67. I would say a good PE for them would be somewhere less than like 30. Closer to 20, I think would be, I think there we'd be talking about a solid deal for the stock. But if we look at forward estimates from analysts, even with EPS growth expected to rise in the coming years, we still wouldn't get to those PE levels until around 2027 or 2028 at best, which again, that's assuming that they don't face many lawsuits or major blowback from the recent issues. So in conclusion, guys, is the stock a buy right now? Is it a good value here to pick up? Again, short-term predictions are purely speculative and anyone's guess is as good as mine, but longer term, it's really going to rest on the shoulders of how bad of a hit does their brand and their financials take in the coming quarters and years. So from that standpoint, I think being a little more cautious and kind of waiting for some clarity does make sense. But on the other hand, I would still rate the stock a buy here just from what I'm seeing today. My gut tells me that the stock will be trading higher in the future than where it is today. So I still think it's pretty good. Cybersecurity market is red hot. This is a company with very high growth, and the recent issues had nothing to do with their abilities to protect customers. So for me, a big 30% haircut on that stock looks like enough of a good reason for me to start buying into it in small amounts for a long-term recovery. And yet I am still not buying the stock myself, which I know sounds a little hypocritical, but there's one very clear reason for that. And it's that I already get all the cybersecurity exposure that I need, plus way more from other companies that I think are much safer bets. And I own several that fit that bill. But just for example, I'm investing in Microsoft and Cisco. Microsoft has close to the same amount of market share as CrowdStrike, with also close to the same growth in cybersecurity, yet they're insanely larger, more profitable, and way more diversified. And while Cisco is barely growing, they already have much more market share, a way cheaper valuation, and a super attractive dividend to go along with it too. So because of that reason, I have really in the position that I'm in myself. I know this is just kind of for myself, but I'm in the position, I have the luxury of not needing CrowdStrike immediately in my portfolio, and therefore I can wait to see if the stock does happen to go a little lower before buying in. I can actually wait for a better looking valuation that I'd be more attracted to buying in. But again, that's just for my personal situation. That's my own opinion. I would love to hear your thoughts though. And actually, I plan on adding CrowdStrike to our polls in the community portfolio to see if you guys want it added there too. Because I am actually willing to buy the stock. I do like them here, but I'm just kind of 50-50 at these levels for my personal kind of private portfolio. I think if it does keep sinking, I might add it, but for right now, I just don't feel like I'm in a huge rush to jump in. So anyway, I hope this makes sense. Drop your comments down below. Let me know if you have any questions. Hope you enjoyed the video. Let me know what you're doing yourself. I'd love to hear your thoughts. And I'll catch you in the next video, my friends. All right. Thanks again. Take care, everybody. Bye-bye.